sectors when we, invest into credit risk or funds that are investing into papers across sectors, within financial sectors, somehow NBFCs catch a lot of limelight. Now, are there any particular challenges in NBFCs, and do you evaluate NBFCs different than you would, let's say, do other sectors such as power?
Yeah, absolutely. Yeah. And I feel really bad for NBFCs. Let me start off saying that NBFCs have done a phenomenal role, right, in terms of going to the unbanked, causing development. The credit scores that you see of people probably the first time new to credit was taken on by an NBFC. But when disaster hits, what does the media call them? Shadow banks. Gives Chinese examples. I mean, they're regulated by the RBI. So, NBFC is one sector, but it is difficult to analyze an NBFC company because it becomes a sectoral approach. If you have, let's say, a power company, let's say that defaulted, another power company would still probably get money unless there's some big systemic risk which is there. But if one NBFC defaults, a small NBFC, and you've seen it, big NBFCs default, the waves go through the entire sector. So that is the difficulty in analyzing the NBFC sector. And by and large, you will find a decent chunk of NBFCs in our portfolio. The NBFCs are generally volatile. They are more vulnerable to economic risks, macro risks, because they are giving it to a lot of slightly riskier customers. But there is much to look at, right? If you have granularity of portfolio, if your portfolio is diversified, if you have sensible ALM practices, and if you have taken the risk, but you have enough capital to take the risk, if you're conscious of liquidity, then the NBFC always comes through at the very end. In fact, even if you take the two high-profile defaults of the NBFCs that started this call, you have so many NBFCs that have survived, and they're lending to very risky segments. And so risk is something that you need to evaluate. And I think one phenomenal change that has happened in India is the emergence of fintechs and Aadhaar and credit bureaus and so on. I think earlier on, if I took a loan in, let's say, Tirunelveli, since I'm from Tamil Nadu, and ran off to some other place, maybe they wouldn't be able to track me. But now I have an Aadhaar and I have a bureau score. So I can be tracked unless I'm the great Houdini who kind of has a different avatar every time. So I think those kind of changes and the changes that RBI has made to the payment systems and so on, which has reduced the costs significantly. I mean, you must be remembering, Ankita, or maybe you don't because you're so young. But in the old days, when you gave a check, you had to wait for 1 week for the check to clear. Right? It would probably be going from now, it's like 30 seconds. If the transaction is not going, you're clicking your tongue, right? So the NBFCs are big beneficiaries of all this. And people say, okay, wholesale lending. And even I have a bias saying wholesale lending is trickier, right? Because there's chunky loans. But there are excellent NBFCs that have managed this risk very, very well for many years, and they've developed an expertise. So as long as there's common sense, and credit is so much about common sense and good governance, you're okay. And you can even look at NBFCs positively.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.